Who doesn't like them some of that Ethereum? Ether is the dominant smart contract chain, of which every blockchain competitor is building to connect back to. They're building with the EVM, Ethereum virtual machine, fully on the top of their minds. And if they don't, they suffer. So are you ready to suffer through another 10 minutes with me? Well, you don't have a choice, because it's time for Chico Crypto. Everyone should know Ethereum is the center of all things blockchain. Public blockchains are all connecting or will be connected to Ethereum with bridges. Shoot, out of the top 10 cryptocurrencies, they all have something to do with Ethereum. Bitcoin has multiple bridges to Ethereum. Cardano is building the ERC20 converter. Binance Smart Chain already has a bridge. Tether is on the ETH chain. XRP partner Flare is building a bridge to ETH. Dogecoin has Dogethereum in the works. USDC is mainly on ETH. Polkadot has multiple bridges to ETH. And Solana has Wormhole, their ETH bridge. So every asset in the top 10 is bending the knee to Ethereum. Like I said, if they don't build back to Ether, they silo themselves off and they suffer. Although with all of this bridging and the action taking place on top of the ETH chain, it's pushing it to its limits, to its gas limits. As we can see, since the market's calmed after the May crash, the gas fees have been trending up month after month. June higher than May, July on average higher than June, and now at the end of August, they are back at high and ridiculous levels, which can be seen with the prices to do DeFi transactions. To do simple swaps on DEXs, it's basically $100 or even more. Supplying liquidity to these protocols is going to cost you just as much, basically $100 or more, and removing liquidity, the cost is between $100 to $160. What the frickin' freak, Ethereum? People thought this was supposed to be fixed with EIP 1559, the update to the transaction fees on the network. No one thought it would get worse. Well, there were some major misconceptions about that EIP. It wasn't going to fix the high gas fees. EIP 1559's main benefits were reducing ETH issuance without reducing the network security with base fee burns. It also improved gas fee estimations for dApps and wallets, and finally it improves the UX for wallet users. The most significant improvements we are going to see with gas fees in the short to mid term isn't coming from something being changed on the layer 1 base chain of Ethereum, but when rollups are pushed out into production. If you didn't know, less than a year ago, Ethereum had its biggest change ever to its roadmap. Vitalik posted the change with this blog, a rollup-centric Ethereum roadmap. In the blog, he exclaimed, "The Ethereum ecosystem is likely to be all in on rollups, plus some plasma and channels, as a scaling strategy for the near and midterm future." What this means is the main L1 chain will no longer be a smart contract chain per se, but a settlement layer for rollups and scaling solutions. Smart contracts and the dApps from them will be built on the rollups, and Ethereum is just going to settle their transactions. If this is the case, then win rollups. Win gas relief like a large dose of Pepto-Bismol. Soon, my friends, very soon. Everyone was talking about a layer 2 DeFi summer earlier in the year, but it's looking like it's going to be a late summer and layer 2 fall. Arbitrum and their rollup, Arbitrum 1, is one of the more hyped rollups that even Reddit has chosen to use, and it's looking to be production ready first. They are already wide open for developers and dApps to build on top of. Anyone can use it to go deploy theirs, but it's still not open to the general public. But that's going to change really soon. Their Twitter said this last week. No need to wonder when Ren, because Ren Protocol's integration with Arbitrum 1 is live. You'll be able to use some of your favorite Ren wrapped assets like Ren BTC and Ren Doge when we go live this month. Did you hear that? When we go live this month. We only have 5 more days left in August. So is Arbitrum opening to the masses by the weekend or early next week? Chico thinks so. What about the other hyped rollup from Optimism PBC? Their optimistic rollup named none other than Optimism. While Optimism is actually in a limited alpha mainnet already, users can use it. Last month, they announced that Uniswap could be used on the rollup, and in the blog they said, assuming Uniswap v3 sees equal usage to L1, optimistic Ethereum should offer up to 10x transaction cost savings. Additional demand will drive gas costs higher. For more details, check out Optimism's blog post. Transaction speeds will ramp up over the coming weeks and months as the optimistic infrastructure is tested and optimized at scale, with the end goal of scaling to fully meet demand for low-cost, high-speed DEX trading. Yes, you can actually use Uniswap on a rollup right now, Optimism. And how much is the gas fees? Well, Optimism luckily has a tool for estimating them on their rollup. Clicking on Uniswap, it calculates, and as we can see, the estimation is just 25 cents. Is that for reals? Just a quarter? Well, let's go check. I'm on Uniswap on the optimistic mainnet, and I'm going to convert the rest of this DAI into ETH. As we can see from the MetaMask gas fees, it's 0.001955 of an Ethereum. Well, let's just confirm it. And look how quick the transaction goes through. In seconds, it's blazingly fast instead of minutes to hours with the Ethereum mainnet. But that cost of 0.001955 ETH, is that just a quarter? Well, going to a converter, no it's not. It's actually $6.32. That's a lot better than the over $100 on the ETH mainnet, but it's not a quarter. Either something is messed up with their calculation on their website, or that is when the rollup is fully optimized. All I know is that it's not a quarter as of now. But when Optimism, when is their rollup moving out of the alpha stage and into a deeper mainnet? Well, it's imminent according to Optimism. Just a few days ago, on the 23rd, their Twitter tweeted in reply to someone saying rollups were imminent. And they said, not just imminent, live with Synthetics, Quinta, Uniswap, and 1inch apps, and many more coming in the next few days and weeks. So Arbitrum and Optimism, their rollups are extremely close, like days are just weeks away. What does that mean for regular users like you or I? It means you better get them overalls on and those farm tools ready, as there's going to be a bountiful Layer 2 harvest here soon. What do I mean? Well, the DeFi apps and protocols are going to be wanting you to come use them on Layer 2. The transaction times are a thing of the past, and the low fees will entice the users to come to the layer. But there's going to be competition in this Layer 2 landscape. Big competition between DApps. A DApp will want you to use their app, not their competitors. What are many of these DApps going to do to entice users to use theirs and not their competitors? Incentivize with tokens. There's going to be many liquidity mining programs launched on these Layer 2s, yield farming opportunities that are going to be far and wide, with high APYs due to the DApps and protocols pushing out big incentive programs. Per example, Synthetics on Optimism. This Glassnode Insights blog puts the point across very well. It's titled DeFi Uncovered, Finding Alternative Sources of Yield. And in the blog it says, Synthetics has announced its plan to transition the project's focus and liquidity over to Optimism, an Ethereum Layer 2. Simultaneously, news that SNS stakers could be receiving a series of airdrops in the future has led to even more bullish narratives supporting the token. Returns for Optimism stakers reached an absolute bottom of 15% APY in July, while L1 staking remained relatively lucrative. Following the transition of liquidity to L2, Optimism stakers are now receiving 50% APY and can expect SUSDs, SETH trading pair, SUSD, BTC, and other trading pairs to launch in July or August. The Optimism stakers with Synthetics were only receiving 15% APY, but following the liquidity move to Optimism, they are now making about 50% APY. Liquidity mining incentives are moving from Layer 1 to Layer 2. Although it's not only synthetics, Uniswap is coming with incentives to layer 2 as well. May of this year, Hayden Adams, a founder of Uniswap, said that liquidity mining for Uniswap would be returning very soon. And besides saying very soon, Hayden said, "One thing that we've seen in the past couple of weeks is basically a grant from the Uniswap Grants program, which comes from governance that was issued to someone who's working on liquidity mining smart contracts. And so we're kind of seeing the community build this out." And here is the Uniswap Liquidity Program version 0.1 proposal, first posted in July in the Uniswap Governance Forum and Discussion Board. As we can see, one of the community authors of this proposal is Itzler at Itzler. And in the discussion, Itzler said this, replying to someone asking about optimism. They said, "I think extending the program to include optimism is an excellent idea, and definitely one of the directions we're hoping to include as the program evolves." So, incentives are going to be far and wide with the launch of Layer 2. So like I said, get those overalls ready and farm tools prepared. There's going to be bountiful opportunities on Optimism and Arbitrum alike. Cheers, I'll see you next time.